Assalamualaikum to our lecturer and also our beloved friends. Today, we are from Group 3 will present an Islamic capital market product in Malaysia. First of all, unit trusts have gained significant interest among investors as one of the most accessible investment instruments. They offer several advantages such as professional management by licensed fund managers, regulatory protection through a trust deed, and liquidity via buying and selling units. More importantly, Islamic unit trusts comply with Sharia principles, making them suitable for Muslim investors while also appealing to non-Muslims seeking ethical investment. This presentation will cover the types and characteristics of Islamic unit trust, the Sharia principle applies, their contribution to society, and the challenge faced by industry. So now let's begin with the Islamic capital market in Malaysia. The ICM operates parallel to the conventional capital market, but strictly follows Sharia rules, ensuring that all activities are free from riba, maisir, and also gharar. The ICM plays a critical role in driving Malaysia's economic growth and complement the Islamic banking system by broadening the Islamic financial markets. In recent years, the ICM has grown steadily. The Malaysian capital market is now valued at 4.2 trillion, with Islamic instrument making up approximately 62% of the total market. This demonstrates strong acceptance of Islamic financial instrument by both local and also international investors. Furthermore, Malaysia's ability to maintain its status as a global hub for Islamic financial is supported by a strong regulatory framework progressive. Moving on to Islamic unit trust, these are major collective investment schemes in Malaysia's ICM. They allow individual investors with limited capital to pool their funds and invest in a diversified Sharia-compliant portfolio consisting of Islamic equities, sukuk, and money market instruments. All investments are professionally managed to ensure efficiency and full compliance with Sharia principles. In addition, Sharia boards or advisors are appointed for each fund to continuously monitor and validate the investment. This not only strengthens Muslim investors' confidence about the halal status of their investment, but also attracts non-Muslims who are looking for ethical and also responsible investment options. The growth of Islamic unit trust also plays a broader role in Malaysia's ICM. They mobilize domestic capital, improve market liquidity, and also attract diverse investors. Ultimately, they support individual financial goals, contribute to sustainability, economic development, and reinforce Malaysia's position as an international hub for Islamic finance.
Islamic unit trust is a Sharia-based investment product that follows Islamic principles. It allows investors to pool their money into one fund, which is then managed by professional fund managers. The main objective of Islamic unit trust is to generate halal and ethical returns while ensuring full compliance with Sharia law. Islamic unit trust is a collective investment scheme where funds are collected from multiple investors. These funds are invested in a diversified portfolio of Sharia-compliant assets such as equities, sukuk, and Islamic money market investment. All investment activities are managed professionally and supervised by a Sharia committee. One of the key characteristics of Islamic unit trust is that it avoids prohibited elements such as riba, gharar, and maisir. The fund only invests in halal industry and ethical business. Returns are generated from real economic activities and profit are not guaranteed because investors must share both the risks and returns of the investment. Islamic unit trust operates according to Sharia principle. This principle ensures that all investments are halal, transparent, and fair. The fund avoids interest-based transaction, excessive uncertainty, and gambling. Overall, the principle helps protect investors and promote ethical and social responsible investment. Riba refers to interest, which is strictly prohibited in Islam. Therefore, Islam Unit Trust doesn't invest in interest-based instruments and doesn't offer fixed or guaranteed returns. Instead, profits are earned through real business activities such as trade and asset-based investment, ensuring fairness in the investment process. Gharar means excessive uncertainty or ambiguity in contracts. In Islamic unit trust, all investment contracts and objectives must be clearly defined and transparent. This helps investors understand the risks involved and prevents unfair or unclear transactions. Maisir refers to gambling or speculative activities. Islamic unit trust avoids investment that rely on chance or excessive speculation. Instead, funds are invested in productive and real economic activities which helps reduce unnecessary risk for investors. Islamic unit trust doesn't invest in industries that are prohibited in Islam, such as alcohol, gambling, pork-related products, and conventional interest-based financial institutions. This ensures that the investment portfolio remains ethical and aligned with Islamic moral values. Sharia governance plays an important role in ensuring continuous compliance with Islamic principles. A Sharia committee supervises the fund conducts screening of investment and monitors ongoing governance play an important role in ensuring continuous compliance with Islamic principles. The Sharia Committee supervises the fund, conducts screening of investment, and monitors ongoing activities. Any non-permissible income is purified by donating it to charity. Sharia contracts are used to define the relationship between investor and fund manager. These contracts explain how the fund is managed, how profits are shared, and who bears the risk. The main Sharia contract used in Islamic unit trusts are wakalah, mudarabah, and musyarakah. Under the wakalah contract, investors appoint the fund manager as an agent to manage their investment. The fund manager receives a management or performance fee for their service. Profits belong to investor after fees, while any losses are borne by investors unless there is negligence by the manager. In a mudarabah contract, investors provide the capital while the fund manager provides expertise and management. Profits are shared based on a pre-agreed ratio. If a loss occurs, it is borne by the investor unless the fund manager breaches the contract or acts negligently. Musyarakah is a partnership contract where both investor and fund managers contribute capital. All parties may participate in management decisions. Profits are shared according to agreement, while losses are shared based on capital contribution. This reflects a true partnership and risk-sharing concept in Islamic
The
finance.
Securities Commission Malaysia plays a vital role as the main regulatory authority in ensuring the orderly development, stability and integrity of the Malaysian capital market. It oversees and supervises all capital market activities including equity, bond derivative and Islamic capital market to ensure transparency, fairness and strong investor protection. In addition, the SC advises the Minister of Finance on matters related to the capital market which support the formulation of effective financial and economic policies. The SC is also responsible for reviewing securities laws and recommending reform, particularly in areas such as corporate takeovers and mergers to protect the right of minority shareholders. Beyond regulation, the SC actively promotes the development of the capital market through research, education and training programs to uphold high standards of professionalism, ethics and integrity. Through this role, the Securities Commission Malaysia strengthens market confidence and contributes significantly to the growth and resilience of SSC plays a crucial role in strengthening Malaysia's Islamic financial system through three main aspects. First, SSC of Bank Negara Malaysia acts as the highest Sharia authority in Islamic finance with the power to determine Islamic law for Islamic banking. Second, Central Bank of Malaysia Act 2009, the SSC role was further reinforced as the sole authoritative body on Sharia matters, where its rulings are binding on court. Third, the SSC of the Securities Commission Malaysia focused on the Islamic capital market by advising the SC and ensuring that all Islamic capital market activities and transactions comply with Sharia. Islamic fund management is based on 5 essential principles to ensure Sharia compliance and ethical practice. First, Islamic fund management guidelines provide a clear regulatory and ethical framework to ensure transparency in fund operation. Second, strict adherence to Sharia principles is required by avoiding riba, gharar and maisir, as well as excluding non-permissible sectors through proper Sharia screening. Third, strong Sharia governance is ensured through the appointment of qualified Sharia advisors or committees to oversee all fund activities. Fourth, Sharia compliant fund structure and investment are applied using contracts such as wakalah mudarabah with investment limited to approved and managed prudently. Finally, fiduciary responsibility and ethical investment are emphasized where fund managers uphold amanah, protect investor interests and support sustainable development in line with the objective of Sharia.
Assalamualaikum and good day. I will continue about key player in the Islamic unit trust industry. The Malaysian Islamic unit trust industry operates within a well-structured ecosystem where each key player has a specific role in ensuring effective fund management, Sharia compliance and investor protection. First, fund managers are the main driver of the industry. They are responsible for managing investment portfolio, selecting Sharia compliant instrument, implementing suitable investment strategy and reporting fund performance through annual and interim reports. All decisions are made must align with the fund effective in order to achieve optimal returns while managing investment risk effectively. Next, trustees act as independent third party to safeguard investor assets. Their role is to oversee the fund operation, ensure fund manager comply with the trust deed and regulatory requirement, and protect investor interest in cases of misconduct. Example trustee in Malaysia include Amanah Trustee Berhad, Maybank Trustee Berhad and RHB Trustee Berhad. Another important player is the Sharia advisor. They ensure that all instruments and operations comply with Islamic principles by providing Sharia approval, conducting regular Sharia audit and overseeing income purification if any non-compliant income arises. To strengthen investor confidence in Islamic unit trust fund. Lastly, regulatory authorities such as Security Commission Malaysia and the Federation of Investment Manager Malaysia ensure transparency, fairness and integrity in the industry. That's all from me. Thank you.
Next, we move to a real example and market analysis of Islamic unit trust. These two funds represent different categories of Islamic unit trust, namely fixed income and equity-based investment. The first fund is a principal Islamic lifetime sukuk, which is classified as an Islamic fixed income fund. It invests mainly in sukuk with the objective of providing stable income, capital preservation. To its low risk level, this fund is suited for the conservative and risk-averse investor who prefer predictable returns rather than high growth, and it more suitable for growth-oriented investor with long-term investment horizon confidence. Second fund is a public Islamic equity fund, which invests in Sharia-compliant equity. The objective of this fund is a long-term capital growth as it exposed of the equity market. It carries a medium to high level of risk. It's suitable for growth-oriented and long-term performance overview. This slide summarizes the market performance of both funds, including their fund type, risk level, and historical return. The principal Islamic lifetime sukuk fund shows stable performance with 1-year return of 4.57%, third-year annualized return to 5.18%, and 5-year annualized return to 3.40%. In comparison, the public Islamic equity fund record a 1-year return of 4.78%, a higher third-year annualized return of 8.19%, but a lower 5-year annualized return of 1.41%, reflecting market volatility. First, performance analysis. The principal Islamic lifetime sukuk fund demonstrates stable and low volatility performance with a third-year annualized return of 4.18% and 5-year annualized return for 30-40%. The fund focus of consistent return and capital preservation, making it suitable for conservative investor. In contrast, the public Islamic equity fund show a higher volatility as its performance is driven by market condition. The fund achieved a strong third-year annualized return of 18.19%, indicate a good growth potential. However, investors must be willing to tolerate short-term fluctuation, making it suitable for long-term risk-tolerant investor. The second one is risk-return trade-off. This comparison highlights the fundamental risk-return trade-off in Islamic investment. The Sukuk fund prioritizes income stability and capital protection, while the equity fund offers higher growth potential but with higher risk. Third is investment implication. For conservative investors, Sukuk fund provide predictable income and lower NAV volatility. For growth-oriented investor, equity fund may be preferred despite short-term fluctuation in pursuit of higher long-term return. Portfolio diversification can be achieved by combining both Sukuk and equity-based Islamic unit trust fund.
Now, I will continue with section 7.0, which is the benefits and challenges of Islamic Unit Trust Fund. As we can see on this slide, there are two main benefits under section 7.1. The first benefit is portfolio diversification and professional fund management. Islamic Unit Trust Funds pool investor money and invest in various Sharia-compliant assets such as equities, Sukuk, and Islamic money market instruments. This diversification helps reduce investment risk. In addition, the fund are managed by professional fund managers, making them suitable for investors with limited financial knowledge or time. The second benefit is Sharia compliant and ethical investment. This fund operates according to Sharia principle and are supervised by Sharia committees approved by the Securities Commission. This gives confidence to Muslim investors and also attracts non-Muslim investors who are interested in ethical investment. Moving on to section 7.2, which is the challenges. The first challenge is limited investor understanding and awareness. Many investors still lack knowledge of Islamic finance, which may affect their investment decision. Therefore, unit trust advisors play an important role in increasing awareness and confidence. The second challenge is limited investment diversification. Due to Sharia restrictions such as riba and gharar, Islamic fund managers has less flexibility when selecting investment instruments. As a result, Islamic unit trust portfolio focus more on equity and real estate investment and are less diversified compared to conventional funds. That's all from me. Thank you.
Overall, the Islamic capital market in Malaysia has developed into a vital component of the national financial system and has positioned Malaysia as a global leader in Islamic finance. This success is supported by a strong regulatory framework and the effective role of the Sharia Advisory Council, which ensures Sharia compliance and enhance investor confidence. Islamic unit trusts also play an important role as collective investment instrument by providing access to small and medium investors, while also catering to different investment needs based on varying risk profile. Nevertheless, the industry continues to face challenges such as limited investor literacy and a lack of diversification in Sharia-compliant investment instrument. Therefore, greater effort are required to enhance investor education, innovation in Sharia-compliant investment such as ESG integration, strengthening Sharia governance, and wider adoption of digital platform.